everyone. Good afternoon. And looks like perhaps it could still be good. We're off of the worst point right now.
Absolutely, Sumaira. We'll talk to you in just a moment. We have, the markets which are staging a fair amount of recovery actually from the morning lows. The Nifty is up almost 100 odd points, and the mid-cap index too has recovered a tad bit. In fact, this morning we were staring at a near 3% cut for the mid-cap index, and now it's limited to closer to around 1.5%. By no means are we out of the woods, but definitely we are seeing a fair amount of recovery, and that recovery could be attributed to three key stocks on the index. In fact, HDFC Bank is playing a quick cameo on account of the results that we saw. And secondly, the big contributor today has to be Reliance. So together, HDFC Bank as well as Reliance are contributing majority to the gains that we're seeing on the Nifty. And then we have something like a Titan and TCS, both these stocks which were, under pressure all through last week, barring TCS. We are seeing some bit of comeback in Titan as well. In the mid-cap end of things, again, the winners are the usual suspects. We have Tata Elxsi, which is up almost 6% odd. Jubilant Foodworks, which has been hitting fresh highs on a consistent basis, is currently at the high point of trade. We have PVR, which is doing well as well. Well, we're ready with Sumaira's audio, I guess. Sumaira.
Well, I guess it just wasn't behaving itself, no.
Okay, it isn't behaving itself. All right. So what we'll do is we will take note of all the top stories that we're tracking and then go back to Sumaira. Market recovers from lows in the afternoon trade. This follows weakness in Asian stocks with both the news of the US stimulus and vaccination rollout well digested. Metal and realty stocks slide the most. Financials outperform. HDFC Bank hits a new high after the company posts its highest ever profit of 8,700 crore rupees, aided by treasury income, even as interest income sees muted growth. Brokerages up the target price on the stock to 17 to 1,800 rupees apiece. Mid-cap index tumbles around 2%, dragged down by NBFCs, realty and metal stocks. Mastech loses 10% after CEO resigns. PVR higher despite cutting its losses in the third quarter. Total SE pickups, a 20% stake in Adani Green. Total is what we're talking about, from the promoters who are expected to use the funds to pay down their debt in another nearly 600 crore deal. Metropolis, on the other hand, inks an agreement to acquire South-based diagnostic player Hitech to strengthen its southern performance. The stock reacts positively. India's Urban Development Secretary tells cnbc TV18 that he does not expect an MNREGS style scheme for urban poor, though he does expect a fillip to be provided to the realty sector. Also expects the affordable rental housing segment to cross 1 lakh houses in the coming year.
Okay, finally. We have this afternoon joining in Gaurang Shah of Geojit Financial Services and Himanshu Gupta of Globe Capital to answer all our stock queries. Gentlemen, good afternoon to both of you. The first query this afternoon comes in from Ramya HM. She writes to us from Mysore. She says she wants the short-term and the long-term views on TCS. So, Gaurang, I'm not sure if she holds the stock, but TCS, given their stellar numbers this time around, you think they're good for more? Is that the trajectory the company will be following from here on?
Thank you, Sumaira, and good afternoon to all of you all. So I think even before the numbers, we were positive on TCS amongst the frontline IT names. And the third quarter delivery of numbers reinforces our confidence in terms of long-term investment idea, being a top pick in the IT pack. Post the third quarter numbers, Sumaira, we have upgraded our targets on TCS to 3,670 odd. And let me say this, given the fact the verbatim or the commentary from the management in the outlook of business being so robust and so confident, I would not be surprised there would be multiple re-rating upwards for TCS on fallback of strong numbers for the fourth quarter and the next financial year. So if you've not bought it, you've not missed the bus, go ahead and buy it. Only thing is, don't go and buy all out at one time. Start with 25, 30, 40% at current levels, and staggered way on the lower level, you can go on adding the stock.
All right. In fact, if the buy call is made, might as well go to Himanshu as well and look at how the charts are saying. What the charts are saying. Himanshu, we did see a big move across the IT pack over the last year or so. In that, TCS has actually been an underperformer. And while the results were very strong, like Gaurang said, the stocks continue to see some profit taking, doing well today. So, do you think it's a fresh up move that we're witnessing there?
Hi Mangalam, hi Sumaira, good afternoon to you all. Well, Mangalam, absolutely, the chart setup is very positive, and despite we have not seen outperformance coming from this heavyweight, my sense is that going down the line, we will continue to see the stock moving up. In the short term, since we have seen an uptick in the entire IT pack, and even TCS have moved quite a bit from the lower levels. So in the short term, my sense is that there can be a consolidation post those numbers, some profit booking can be seen. 3,000, 3,200 is the range which we are working in the near term. But from a medium to long term perspective, I think there is a very high possibility that the stock might be rallying towards 3,900, 4,000 odd levels in next 1 year, 15 months time frame. So yes, definitely I concur with Mr. Gaurang's advice. Buy in a staggered manner, add on declines and stay put. Yeah.
All right, fair point. Then we have another query. This one comes in from Karnataka. Nandish calls us. Nandish, you have investments in CG Power?
Yes, I do.
Tell us a little more.
Yeah, actually, in the month of March 2021, I have purchased CG for 10,000 shares at rupees 8. I want to know whether should I exit or should I hold it for another 6 more months due time, because if I am not wrong, Murugappa Group has been invested in this company. So actually, I would like to know whether should I exit. This is the right time, or should I hold it for another 6 to 1 year view.
That's correct. The Murugappa Group has indeed gone ahead and purchased the stake and has become the owners of CG Power. And that was the big reason why we saw the big move on the stock as well. It was a multi-bagger all of last year. In fact, in the last 12 months, the stock has moved nearly 4 times. And majority of those gains, Nandish, have been enjoyed by you. You entered at 8. The stock is at 42, sitting on a handsome gain out there. So big ups to you. Was it just a trading punt that you had made, or did you really think something is going to happen and you made a calculated investment?
No, actually, this stock was recommended by one of our, senior, SP Tulsian.
Okay.
Based on CNBC, recommendation only, I had invested. Based on the thing only, I am holding it.
All right. So congratulations for making the kind of money that you are. Gaurang, your thoughts on CG Power if you actively cover it? He entered at 8 rupees. The stock is at 42 rupees. He's making a good 3.5 lakh rupees. Do you think in a market like this, he should take home the profits that he's making, or maybe stay on for the next 6 months because the owners have changed?
Well, Mangalam, from 8 to 42, I think you are deep in the money. And when you make these kind of returns, it's always prudent to act proactively and at least move your investment into much more stronger names in the similar sector. And if I have to, of course, on CG Power, we don't have any specific coverage, but purely looking at the profits that Nandish is making from 8 to 42, I think it will be prudent to book profits and move into stronger names. And if I have to suggest 1 or 2 of them, then first one would be Havells India and second one would be Vigard. We have coverage on these 2 names in the similar sector.
Okay, let's get in the next query from Vineet Kumar. He writes to us from Hyderabad. He says he has 1,000 shares in Clarent Chemical at 400, and he also has 4,000 shares in Take Solutions at 52. He wants to know the fate of both the counters. Himanshu?
Talking about Clarent Chemical first, I think the short-term chart is suggesting that we can see some kind of consolidation in the stock, where actually the stock can test levels of 320, 325, which is close to the 200-day moving average. So from a short-term perspective, I think he needs to be a little bit more patient. But from a longer perspective, I think the overall setup still looks positive. And I have, looking at the charts, I have a belief that we might see some buying coming in at lower levels around 320. And then post this consolidation, the stock might rally towards levels of 400 in the coming months. So he can stay invested and add on declines close to 320 odd levels.
All right, so that's the view coming in on both those stocks as well. With that, we slip into a short break. But as we do that, just keep an eye out on the market. The Nifty is now roaring towards that 14,400 mark. That means a recovery of almost 120 odd points. So there is a fair amount of recovery that we're seeing, just 45 points into the red. When we started the show, it was close to 80 points into the red. So a big move is what we're witnessing. What are these contributors on the Nifty right now? Well, in the last hour or so, Reliance single-handedly has taken the market higher. So Reliance continues to move to the high point of today's trading session. And alongside that, we have a couple of these oil marketing companies also spiking in just the last few minutes. Still in the red for BPCL and IOC, but a fair amount of recovery in the last few minutes. So we'll watch out for the markets as we move into the last couple of hours of trade. But here's a short break and time now for the CNBC TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 today, kept repeating it through the day, but in case you missed it, here's another opportunity for you to look at the question and win the prizes. The question is, a new duty was imposed on exports of cigarettes, cigars and cheroots in 1949-1950. What was the rate of such duty? Your options: A, 5%, B, 10%, C, 12.5%, D, 15%. Send us all your answers on Twitter. Post your answer as a comment on the question tweet on CNBC TV18 News. Do not forget to use the hashtag BudgetWithCNBC TV18. Now hurry and send us your answers. Remember, we will announce the winner at 3 p.m. today.
Hi, welcome back to Your Stocks. Things are picking up for the market, at least on the front line end of trade. So the Nifty is now just down about 0.25%. The Sensex, in fact, could move into the green sometime now. So we're moving off of the lows quite swiftly. What's doing well? Well, things like Tata Motor, BPCL. Now, these are stocks which are still in the red, but they're seeing quite a bit of up move. In fact, Tata Motors has moved up about 1% in just the last few minutes odd. So you can see that uptick there. Other than that, even Bajaj Finance is another one, still down in the red, but steadily moving higher. On the upside, there are stocks like UPL, Reliance, which have anyways been doing well. So let's answer some more queries today. GB Venkat now is on the line with us from Chennai. Mr. Venkat, good afternoon, sir. How can we help you?
Good afternoon, ma'am. Ma'am, I have two shares I want to have view on it. One is that P Pfizer at about like 100 shares around 5,900 levels, and KRBL I've got 2,000 shares at around 295 levels. So kindly suggest me if I have to hold on or I have to exit the current levels, or I have to.
Are you a long-term investor? Are you a long-term investor?
Yeah, you can call me.
And you have other stocks too?
Yes, I have these KRBL and P Pfizer.
No other stocks? These are your only two stocks?
Yes, ma'am.
Okay, Himanshu, for somebody who is only holding two stocks, Pfizer, understandable. KRBL, is that the best pick? And in any case, what is the recommendation?
Yes, Sumera, I think first talking about Pfizer, so this is one stock which can be held in the portfolio, strong fundamentals, of course. And on the technicals parameter, I think there is a possibility that the stock might retrace and test support zones closer to 4,600, 4,700, which on the chart looks like a decent medium to long-term support. So there a hold strategy is advised. As far as KRBL is concerned, I think this is a weaker looking chart, and my sense is that in the coming weeks and coming months, he can further see lower levels. The charts are not looking strong, and since he told that he is holding only these two stocks and the quantity here is fairly large, so my suggestion would be to bite the bullet, exit from this stock. The chart is suggesting weakness going ahead, and he can switch to stocks like Hindustan Unilever or an ITC, which have just started to move up.
All right, fair point. Those are Rallis numbers at the bottom of your screen. Single-digit growth in the company's revenue, not a big miss out there. 7% growth is what we're witnessing, but more importantly, the EBITDA has grown much faster, and which explains why the net profit is higher by about 20 odd percent. The EBITDA has grown by about 8 odd percent. That comes in at 60 crores. compares with 55.5 odd crores. That means there is a slight margin expansion, and the net profit as a result has grown by about 20 odd percent. Perhaps the other reason why the net profit would have grown faster would also be on account of tax expenses. Not particularly. The tax expense is close to 16 crores. Okay, there is an exceptional gain of 6 crores, which is why the net profit is 20% higher as against 6 to 7% growth that we've seen in the company's top line as well as EBITDA. So the net profit has been boosted by an exceptional gain of close to 6.1 odd crores, but otherwise also stable set of numbers coming in. There you have it, a one-time gain of 6.1 crores, which is why the stock's still sitting with a cut of about 3 odd percent. Let's go across to another query. We have a query coming in from Jhansi. Mr. Rajesh Srivastav writes to us, holds about 16,000 shares of PTC India Finance at 16 odd rupees. Wants to know whether to hold or sell. Not sure, Gaurang, if you cover PTC India Financial, he's making a fair amount of money out here. 16 rupees has turned into 19 rupees. Do you think he should take the money off and put it into another more, resilient NBFC, so to say?
I would definitely concur with that view. And if you look at the historical performance of PTC Financials, then I think it tells you a lot of, history in terms of what kind of wealth deterioration we have seen in people who have invested in. Luckily, this investor is making money 3 rupees. I would say that, of course, no specific coverage over here, but if you have to shift on to another NBFC, then I think L&T Finance came out with the numbers and they look quite good to us, and we have a positive coverage on L&T Finance. You can definitely book profits, whatever you're booking, whatever you are having, and move into L&T Finance.
Okay, Himanshu, what's your take on PTC India Finance?
Well, Sumaira, I have a different opinion here, and what I believe is in the month of March, the stock has actually completed one bear cycle, and coincidentally, just above 16 level, 16 or 15 rupees level, the stock has actually confirmed that the stock is actually now in a bull run, and that's where the buying price of our investor is. So my advice is to, if at all he wants to book some profit, that's fine. He can book part profits, trail stop loss around 16 rupees, which is near to the buying price of the investor. My sense is that stay invested in the stock, and the stock is likely to get heading towards 28-30 rupees in the coming months. The chart setup is quite positive.
Okay, the next query comes in from Mr. Ravi Chandra Venkat Rao, who writes to us from Chennai. He says he has 57 shares of Shankara build at 1665 odd. He wants to now know what he should do with it at this point. Gaurang, he's making quite a bit of loss, but with budget around the corner, you think stocks like this could do well? Could he regain his buy price?
It's a tall order, Sumaira. I think 1600 was the buy price, and the stock is trading at, correct me if I'm wrong, somewhere close to about 400 odd levels. And, to have that kind of a positive impact on the stock on the budget, I think it's a wishful thinking. To be very honest.
I mean, the impetus from the budget and henceforward, like say a year or so.
Looks quite tall order, to be very honest. We don't have any specific coverage, and if I'm not mistaken, there was some news flow as well on the stock, which made the stock correct from those 1200 to 1400 mark to, I think, close to maybe about closer to 300, if I'm not mistaken. So, I mean, first of all, you should have taken remedial steps much earlier when you started losing 15-20% of your capital invested. Having said that, I think alternative investment idea, if I can suggest, then HCL Tech delivered numbers last week, stellar set of numbers over there. Prudent to either at current levels or on rallies, maybe if Himanshu can suggest some higher levels to minimize losses, then move into HCL Tech.
All right, fair point. Shankara Bilpro, actually, when it came out with an IPO, it was in the same week as that of DMart. The issue price was close to around 460. The street was pretty gung-ho about their retail business, and then suddenly, the retail business started to underperform, and there was a scramble to the exit door with all the institutions selling out, and which is why the stock from close to around 1800 fell all the way up to 300, and now is languishing around that level, still below the issue price. Its counterpart DMart, on the other hand, which came out with the IPO at the same time, is now 10 times the issue price, close to around 3,000 odd rupees. Himanshu, where can he minimize losses? What is the trend suggesting?
Well, I don't see any meaningful rebound in the stock, Mangalam, and the advice would be to bite the bullet at the current levels, book your losses here. And there are two recommendations in addition to HCL Tech, which Mr. Gaurang just suggested. That's an absolutely good long-term chart, which can be bought. And in addition to that, I think Kotak Mahindra Bank that has actually given a small retracement near its short-term support levels around 1850. That's a good risk-reward bet from a short to medium-term perspective. And secondly, Reliance Industries, after a very long consolidation of many months, the stock is actually giving a breakout today. So there, I think some more decent gains can be seen in coming weeks and months. So I think he can switch from these book your losses in Shankara and switch to either of these stocks.
All right, gentlemen, thanks very much for joining in to advise our viewers. With that, we'll wind down on your stocks for now. The market is doing well to track all of that action now with the team of Closing Bell. See you.